Good morning, everyone.
Morning.
Hope everyone's had a nice weekend, and we begin the week with a little fog and rain, but it's supposed to get better later on. Anyway, we're here today for the meeting, and let's begin.
Thank you, Mr. Chairman. I want to welcome all of us to this Audit and Finance Committee meeting of the New York City Housing Authority, our first sitting for the year 2023. We want to welcome members of the executive. We want to also welcome members of NYCHA, both executive and staff, and those who are watching online. At this time, we want to quickly remind you that we encourage you to take your phone, place it on a silent position, or any other electronic devices that which may interrupt our meeting. As our meeting will be streaming live, we ask that all members and persons who are speaking to the meeting, you speak audibly in the microphone so that can be heard clearly by all involved. At this time, we want to go straight into our roll call to formally recognize persons in our meeting.
Good morning, everyone, and welcome to the Audit and Finance Committee meeting. So for the roll call, we have Mr. Victor Gonzalez, who is the chair of the committee.
Present.
Mr. Mark Kaplan, independent member of the committee.
Present.
Mr. Richard Koo, independent member of the committee.
Present.
And to my right, we have Jeffrey Lesnoy, who is the controller.
Present.
Ms. Anika Lescott Martinez, CFO.
Present.
We also have from Deloitte, Jill Strohmeyer,
Present.
Alex Harvey,
Present.
and from finance we also have Ayat Lee, who is the director of general ledger.
Present.
Judith Francis, Amita Patel.
Present.
From law department we have Jason Goldberg,
Present.
and from our audit team, to my left is Terence Clark, acting director.
Present.
We also have Vilma Huertas, who is the special advisor to the CEO.
Present.
We also have from our internal audit team, James Seacock,
Present.
Frank Han,
Present.
and Avik Das.
Yes.
So we do have the quorum for the meeting in terms of the audit committee members, so we can start the meeting.
Okay, thank you very much. From our agenda, Mr. Chairman, first item we have here is the approval of the Audit and Finance Committee minutes for December 15, 2022. Is there a motion?
I move.
That's been moved, seconded.
Can I make a correction, or can I make a comment or a correction to the minutes before we start? Yes, absolutely. I do my comment, right? It's on, right? I have to put it close to my mouth?
Yes, please.
Oh, okay, good, thank you. Do I start singing the aria now or later? On page 5, I would say it's the second full paragraph where it said Mr. Koo raised the question as to whether a waiver can be obtained. On the second line, it says can be obtained on the HUD Housing and Urban Development requirement to have it tested by Deloitte. I would like to clarify that and to say it's not it, or it's the lead paint compliance instead of the word it. In other words, it's not clear what it is in reading the first sentence. So I'm clarifying that to read that the it refers to lead paint compliance.
Okay, we made the adjustment accordingly.
Oh. Does that make sense?
Yes.
Yes.
Okay?
Yes,
I
that's
mean, not
right.
that it is anything wrong with it, but, thank you.
No,
And
this
you're always
is-
picking up little things like that in the, let's see, the second full paragraph, in the third line. The second full paragraph in the third line, it should be is the standard setter, not are, because that's a singular. And then down below, it says, if a control deficiency is found, substantive testing would be elevated, but if not, would be lowered. I'm not sure whether the it refers to deficiency or levels. I think they need a little change in the grammar.
What page are you on, Mr. Kaplan?
And then,
Mr. Kaplan, just want to clarify that, what page you're at and what paragraph?
page three.
Page three.
Well, it says Mr. Strohmeyer spoke of a non-integrated audit of internal controls. I don't know if I've ever heard that kind of thing referred to. Is that technical?
That's that.
Okay. But then it says if a control deficiency is found, substantive testing levels would be elevated, but it would not be low. What does the it refer to? So that one, as long as we're doing this, if you go back to page 2, in the third paragraph under Roman 2, this risk is consistent across all single audits that Deloitte performs and is a risk that appears
What paragraph?
What?
third paragraph.
Third.
Third or fourth?
No, it's the third paragraph on page 2, under Roman 2.
3. Right here?
Yeah,
Starts with Deloitte.
Deloitte.
Starts with
Starts.
Deloitte. Determine that management override.
Right, and the last sentence says this risk is consistent with all. Is the risk that's consistent or,
The risk of management override of controls is a significant risk for all audits that Deloitte performs across all of our audit clients. I think that's what this is referring to.
okay, all right, then, in the next paragraph, key accounting estimates used to determine the value of all liabilities or assets. I'm not sure that the value of liabilities is an appropriate way of referring to it. And then, let me go on. The next paragraph, Deloitte will focus their attention on those transactions. Additionally, the audit team will also search for transactions that seem unusual in their fieldwork. And it's not unusual in the fieldwork, it's the search for, I think that's.
It should end with unusual.
Yeah, and then the last paragraph, NYCHA will subject to new accounting standards. This is to be recorded on the balance sheet. It will be subject to new accounting standard information stations this year that require leases meeting criteria to be recorded on the balance sheet. All right, I guess that's okay. All right. Oh, and then there's just an amusing one on page 5. The AFC needs a motion. And that's it. I guess it's moot. All right, no, it's not the style I would use. It's okay. I have no further comments.
All right, no further comment on,
Yeah,
Yes,
I just have something, and I don't know whether this is the time to ask it or not. I'll ask it and you tell me if it's the appropriate time. there's a section in page 5 that talks to energy efficiency. And, you know, the score that it has in the buildings.
You want to tell us specifically where on page 5, Mr. Gonzalez?
Energy efficiency. Yeah,
We're on page 5.
I'm not mistaken. Was it? Was it the minutes? I'll see.
I don't see it.
My fingers are
Page 5 is all that.
You're right.
Now we know because he took off his glasses.
I'll find it.
And it's
Okay.
okay. But it has to do with the grading of the buildings with the gas emissions. Maybe it's in the Deloitte issue. But I'll ask the question a little later. Let's move on with the meeting.
While we're on page 5,
You want to use the microphone, Mr.
while we're on page 5, this is a substantive question, but whether, should we raise it now or later? But the question is whether, on the 1, 2, 3, 4th paragraph, it said the members requested that NYCHA management draft a waiver request on this special test requirement for the AFC to send to HUD. Was that ever done?
Yes, this was done, it was sent to your email for the members' review last Friday.
Last Friday?
Last Friday.
I'm sorry, I never received that. I didn't receive it.
Resend it again.
Okay, we can resend it.
Yeah,
That's all.
resend.
This was a special waiver request on the special test requirement?
Yes, the draft letter was
Okay.
prepared
I didn't
and
get
submitted.
it.
I didn't get it, so you could resend it to me?
Sure.
We don't have it available now, do
By the end of this meeting, I'll send it to your email.
we? Okay. No, but I mean, we don't have it to discuss today prior to our leaving here, because we won't be meeting again for several months, so I just want to know if it was done.
It was done.
It was done. It was done this time.
And can we review it before?
It was done. We can print copies for you. I'm not
Okay.
sure that the meeting is the venue
Okay,
to
so
review
you
the letter.
print it
It
while
is for
we're-
your
while-
review, it
while
is
we're
your
here.
letter, it is for your review to comment
Comment,
on accordingly,
yes.
Okay, thank you.
and we can facilitate sending it to them.
Thank you, Mary.
Okay?
That's it. Other than that, I second the motion.
Okay, the motion is second.
Yeah, you moved.
Move it and second by Mr. Kuru. All in favor?
Aye.
There's no objection.
With the corrections.
With the amendment correction.
Corrections.
We continue our agenda, Mr. Chair, with presentation from Deloitte on the status update of the 2022 audit.
Thank you, committee members. All right, so first, we thought we would report on the procedures that we've completed so far with respect to the audit. To begin, we have assessed the independence of every member of the Deloitte team, including specialists that have joined the team as well. We've updated our understanding of NYCHA's operations and of its control environment, and have not noted any significant changes from the previous year. We've determined a materiality level based on activity for the year, which we're using for our substantive testing. And in that same vein, we've started performing preliminary analytical procedures on certain significant account balances. We have prepared audit confirmations for cash, investments, and debt. Actually received a number of replies for cash and investments so far. And we have also prepared confirmations for legal entities to confirm any legal contingencies or legal matters that might have come up during the year. We continue to read the minutes of the meetings of the board of directors and of the audit committee to identify any significant issues that come up that pertain to the financials. And we've held planning meetings with different audit specialists engagement, including those in IT, for pensions, for OPEB, claims, and for leases. Moving on to some of the procedures that are in process now. So we are currently in the process of testing internal controls over financial reporting. So that would be the design and the implementation of controls that are operating at NYCHA. And we are currently in the process of testing the substantive testing areas for the following significant account areas, including cash and investments, capital assets, including construction projects that are in progress, and asset retirement obligations, operating receivables, leases, which we'll go into a little more in the following slide, accounts payable and accrued expenses, long-term debt, pensions and other post-employment benefits liabilities, certain claims, revenue in general, including tenant revenue and unearned revenue, that's revenue received in advance, subsidies and grants, which also go into our single audit testing, we'll go into a little later, capital contributions, expense testing, which is a lot of our focus, at least on the compliance side, and for journal entries, as Jill mentioned, a big focus is also management override of control, so we look at that, including any adjusting entries, and those are typically manual journal entries that are of higher risk, and to a limited extent, some of the automated journal entries that in large part are also tested by our IT department. Does anybody have any questions so far? Yes. Sure.
I have two questions. On the first page, you say the control environment noting no significant changes from prior years. My question is, if changes in personnel, does that have any effect in terms of the control environment? In other words, the control processes that have been in place. Since you said there's no significant changes from prior years, that may be true in terms of procedure, but in terms of personnel understanding of those control processes, has that been taken into account? Have they been trained in new control procedures, et cetera?
We do look at that, yes. In this context, we did mean that the processes that are in place, but we also do look at the competency and the skills, knowledge, and experience of each control owner, which would be the member of NYCHA management that's performing these controls. So we would try and get a renewed understanding of how well they understand the control and how they're performing it. We look at how they document the control process just to make sure that nothing has changed and that the control is operating consistently even with a change in personnel. So yes, that is something that we do take into consideration.
My second question is, what is your definition of materiality?
Well, it's a bit of a subjective metric, but we tend to base our materiality on what a stakeholder would consider material when looking at NYCHA's financial statements. So for instance, if they're looking at something that's $1,000, it's really not, significant at all. It's a drop in the bucket compared to all of NYCHA's activities, but once it rises to the level that a financial statement user would consider making a difference either way, then that would be the level of material. I mean, it's a monetary threshold, but
for NYCHA, we determine that expenses are important to the users of the financial statements. So the users of the financial statements would want to understand how NYCHA is spending its money and where it's spending its money. And so for our audit, we determine that the benchmark to determine materiality is expenses. And then we apply a certain percentage to total expenses to determine our materiality. And then further, we actually take a haircut off of materiality to determine the amount that we will use to determine sample sizes, which is what we refer to as a performance materiality.
So do you take the materiality by each unit of expense?
It's all expenses.
Or you do it based on the gross total expenditure, the $3 billion?
That's exactly right. Total expenses for the year for NYCHA.
So therefore, approximately, what constitutes materiality then? 10%, 1%, 5% of the 3 billion? I mean, what are we
Yeah.
talking about? If you don't mind.
I'm not allowed to disclose the
Oh, you're not?
materiality level.
Okay,
Part of the reason is to combat potential management override of controls.
okay.
If management knew my materiality level, they could book entries slightly below my materiality and something that I could potentially not pick up in my audit work for the year. So we don't disclose that number publicly.
Okay, the only reason I asked that is throughout the document, there's the word materiality that comes up. And so, you know, if it's based upon then your own judgment of what it should be, then that's fine with me.
Yes, it's a professional judgment, and it's it's based on expenses and it's a percentage of expenses. Yes.
Thank you.
On that very same page, capital assets including construction in progress and asset retirement obligations. Could you kind of clarify that for me a little bit? Construction in progress is, as an asset, isn't that an expense?
Well, construction in progress would be a capital asset that meets certain criteria for capitalization. So if it's a long-term asset, it has a useful life over a certain number of years, certain real property, you know, repairs and maintenance, regular ongoing repairs. Those are the types of, I guess you could say, construction progress or projects that would not be capitalized, just the typical ongoing repairs. But you know, for large capital asset, building improvements, leasehold improvements, you know, major renovations or restorations, those would typically be capitalized and depreciated over a number of years.
And so what capital, construction work in progress, if NYCHA has, let's say, a 5-year project, let's say they're building a new apartment complex, or they're doing some type of major renovation project that lasts 5 years or 10 years, the costs that relate to that project are recorded in construction in progress, and they are not depreciated until the project is complete. So while they are recorded on the balance sheet, they are not depreciated until the end of that 5-year or 10-year project, at which time depreciation will begin and there'll be an expense element recorded on the financial statements. So I think of it as a holding account until the project is done, but it's on the balance sheet, those costs.
I was a little, my confusion is, when I say asset, asset is something that's pro for you. When you spend money, it's against you. So I'm thinking, how could it be an asset and an expense at the same time?
Chair Gonzalez, it's not an expense, it's an asset. It's in a holding bin, as Jill referred to.
Right.
And basically our policy draws the line at about 95% of the project completion to transfer it over from construction in progress to a capital asset, which is then depreciated. So if we have a project, you know, a roofing project that's 50% complete, it hangs in construction in progress, it's not depreciated at that point. Once it gets to 95% complete, assuming that's the entirety of the project, it moves over to a capital asset and begins depreciation.
And it does become an expense over future years. The rationale being that these capital assets, construction in progress, once they're placed into service, they're used over a number of years, say for a building, 37 and a half years. So you wouldn't want to recognize an expense all at once for a building just because it's used over time. So you would split that up into 37 and a half payments and depreciate that over 37 and a half years. So what does start off as an asset does become an expense on the P&L over time. You just don't recognize it all at once because you don't use it all at once.
So not necessarily until its completion?
You don't capitalize or place it on the balance sheet until the project is, or you don't move it from construction in progress into PP&E until a project is completed or substantially completed. But then it would be moved from the balance sheet to an expense year over year and depreciated fully after 37 and a half years.
So maybe just an example, if your building has a 50-year useful life, that's how long you expect to use a building. that building would be, the cost associated with that building would be in capital assets on your balance sheet, and over 50 years would be a 1/50th of that amount each year would be recorded as expense. And so at the end of 50 years, all of the expense will have been recorded, and the balance sheet, they'll have essentially to be zero book value because it's fully depreciated at that point in time.
But the expense will be reflected in depreciation line item on the statement of revenues and expenses, not in repairs and
That's
maintenance.
exactly right.
Okay.
And Mr. Koo, if I could backtrack to your earlier question related to controls and staffing, just to give you some peace of mind, there's been no significant change in finance management or key staff during the last year. I mean, obviously, if there were, we'd have to have procedures and controls to integrate them and train them and make sure everything was working as needed.
But in addition to the finance people, there's also the executive chairman and the top management of NYCHA, which has changed.
This is correct.
So that's being taken into account, I
I'm not getting paid.
Yeah, yes. Typically, the changes at that level, those individuals are not control owners typically for what we do related to the financial statements, but we do have meetings and discussions with all members of management, including the interim CEO. We have discussions with that person around risks and fraud as it relates to the organization.
Okay, so moving on to the next steps coming up during the audit. So during April, which is this month, we'll be looking at the implementation of the new lease standard at NYCHA, so that's GASB 87. So on the financial statements, on the comprehensive financial report this year, you'll see some new lines on the balance sheet appear for right-of-use assets and lease liabilities as a result of this accounting standard. And during April, we'll also be testing real estate transactions. Coming up in May, we'll be testing the GASB 49 environmental and pollution remediation liabilities, including looking at any updated lead paint assessments to determine if the liability is where it needs to be this year. We plan to receive a draft of the financial statements from NYCHA, so we'll look at the consolidation of the different legal entities and any elimination entries for related party transactions between NYCHA and the LLC1 entity. We'll be testing the statement of cash flows based on the other transaction detail at NYCHA, and reviewing the financial statements and footnotes as a whole, making sure they accurately reflect activity and audited balances for the year. And finally, drafting a management representation letter for the committee's review and approval. Finally, in June, we will look at some of the going concern assumptions, looking at subsequent events that have taken place after the report date, and to obtain legal letter updates from internal and external counsel to make sure there aren't any legal matters that we might have missed. So those are what we have planned for the comprehensive financial report as of now.
I have one question overarching here.
Yes.
And that is, oops, sorry.
No, you got it on. But you need to get closer.
Oh,
Oh, turn it on.
turn it on, sorry. Everybody's looking on where cash is these days. Are you checking particularly where our cash is and how safe it is?
Yes, we have had discussions with management on this topic, and we have had discussions internally with technical partners at Deloitte as to what procedures, if any, we need to change or modify for this year related to the topic of cash management and collateralization. So we are looking at this as well as any disclosures that may need to be added to NYCHA's financial statements for 2022.
I may be out of place in asking this question, but where do we stand as an organization? I'm addressing management now, about the management of cash.
So in terms of our management of cash, we have a strong treasury department that has internal controls and procedures. We have not had any significant turnover with our treasurer. She's been at NYCHA for 5+ maybe even 10 years. Our bank balances are fully collateralized. So we, assume very little risk.
That's the answer.
And our investment strategy is something that we present to the board. So we present on an annual basis our investment strategy and results. We have to follow HUD investment guidelines. And those guidelines particularly focus on risk, low risk, yield, and so forth to make sure that our balances are safe where they are invested.
That's the answer I hope to get.
In the beginning of this particular section, you mentioned begin testing of real estate transactions. Does that include the RAD and the PACT and all of those transactions as well?
Yes, they do. We're looking at all that as part of the real estate transaction testing.
And it's going to sound bad. Exactly what are you looking at?
We're reviewing management's conclusions around these real estate transactions and how they recorded them in the financial statements, and making certain that we agree with management's conclusions and that everything was accounted for in accordance with the accounting literature.
Okay. Thank you.
And that wouldn't be included in the lease section versus the real estate section?
If these meet the definition of a lease under GASB 87, then they should be recorded as a right-of-use asset and a lease liability. If they don't meet that definition, then they would be recorded as something else, likely a finance purchase or a borrowing of some sort. But that will be part of our process when we go through our test work. Yes.
So now that brings up another question. So being that it's an ongoing process, how is it in the books? Does it fall under the same issue that we spoke of before? That you said while in construction in progress, it's done in a particular bracket, then when it's done, it falls into a different bracket? Being that this RAD and PACT is an ongoing process, how is it in the books?
Well, if I can comment on there, once the closing of a RAD transaction takes place, additional construction that takes place on that facility is on the developer's financial statements, not on NYCHA's. So we are no longer tracking, the refurbishment of the apartments, the refurbishment of the outside, the exterior facilities, etc. That's all on the developer's financial statements. They are collateralizing it against their mortgages, etc. So basically, we draw a straight line at the closing date. We track what the asset is on our financial statements, and we also record the transactions which entitle NYCHA to some financial settlement, things like developer fees, acquisition fees, etc., purchase of rent arrears. But after that point in time, everything takes place on the developer's financial statements.
Well, I understand that certain developments are not finished while other ones are beginning. How do you differentiate the end and the process? In other words, we're going, let's say Wise Towers, we're already done, let's say. Okay. Now, while Wise Towers was being prepared to get all the stuff done, another bundle of RAD and stuff was opening up. So how do those figures Do they coincide? Are they on a separate sheet? I mean, how is it that we're looking at that?
Each development is tracked separately, and the assets of each development are in a separate part of the fixed asset subledger system. However, if we close, for example, if we close a transaction in February of 2023, we draw a line, the assets at that point in time of that development are kind of locked on the financial statements of NYCHA. When the developer starts to make changes and starts to, gut out the kitchens and the bathrooms, etc., they are incurring that expense. They are recording that expense on their financial statements, not NYCHA's. We are no longer tracking those assets, at least not from a financial or an accounting perspective.
So that falls on the developer.
Falls on the developer. They will capitalize it eventually. They will depreciate it, but it's not NYCHA's financial statements.
Thank you.
Okay, we move forward to our single audit reports to be issued, and Deloitte again will continue.
So on page 6, I just want to remind the committee of the 4 reports that Deloitte will issue as part of our single audit package. And the single audit package is slated for issuance in September of 2023, which is 9 months after NYCHA's fiscal year end. Our first report is the independent auditor's report in accordance with government auditing standards. This is the reissuance of our financial statement opinion underneath the government auditing standards. The second report is our report on internal control over financial reporting and compliance and other matters. This is our report on internal controls over financial reporting. The third report is on compliance with each major program that's in scope for the year, as well as internal controls over that major program. And then the final one is our REAC, our Real Estate Assessment Center Agreed Upon Procedures report. These 4 reports are consistent with our prior year reporting package as well. Moving to where we have preliminary assessed risk as far as which programs will be testing this year. We received a preliminary schedule of expenditures of federal awards from management. We will be testing 2 programs, Public and Indian Housing Operating Grants and Public Housing Capital Fund. Both of these programs were tested last year. The Public and Indian Housing Operating Grants is the program that had the material finding related to lead paint last year. Because it had a material finding last year, our audit procedures require that it is in scope again this year for testing, so that is why we are selecting it again this year. And then the Public Housing Capital Fund, there is a closeout process related to this fund, and so we select this fund every year. Because the SEPA we received, SEPA Schedule of Expenditures of Federal Awards, because it was preliminary, there could be an additional major program selected for testing. But at this point in time, these 2 are for sure in scope with the possibility of another program coming into scope. Darshan Patel, who's the specialist leader, he has started work on these 2 programs. He has made sample selections for specific tests and provisions. But there is more work to do across the compliance requirements. We are in the very early stages. I have nothing to report to you at this time as far as findings or control deficiencies. But that is where we are with our single audit.
So I'm to assume that you'll be reporting or auditing on the new changes that the new local law, the new GASB that came in with the new reporting that we didn't do before. So is that going to make a major change? We discussed the...
Yeah, GASB 87, I think, is what you're
That's
referring to, Chair Gonzalez. So yes, GASB 87 on leases. We will be testing this. And if you're familiar with what's happening in the private sector under FASB accounting rules, GASB is different in that it impacts both the lessor and the lessee accounting, for which NYCHA is the lessor and a lessee. So you will have new liabilities and new right-of-use assets, as well as balances for lease receivables and deferred inflows of resources, which have never appeared on the financial statements before. This statement is also retroactive, meaning that NYCHA needs to implement as of the beginning of 2021, so they're implementing as of 1/1/2021, and then we'll carry through the implementation through the 21 financial statements, which will be restated, and then on to 2022. I will mention that because this is such a significant implementation, and likely will result in rather large balances being recorded on the financial statements, Deloitte will highlight this implementation in our opinion this year as an emphasis of matter. It is not a modified opinion, it is still a clean opinion. It's just something that in our judgment we feel is important enough to warrant the user's attention. So anyone reading the financial statements, reading our report, they understand that NYCHA went through this rather intense implementation, and it did restate the 21 amounts in numbers, or amounts in the financial statements. So yes, that will be something that you'll see, and it will change MD&A, it will change footnotes, it will change the face of the financial statements.
Did it have any impact when read against covenants?
It's managed.
We're not expecting any at this point in time. If I can fill in some gaps there, we spoke back in December at the audit committee meeting, and I tried to set a wide range of expectations. We've now tightened that range. It's still subject to finalization the next week plus, and subject to audit, but we're looking at about $700+ million of right-of-use assets that'll be reflected from a lessee perspective. This is largely our 5 or 6 office spaces, NYCHA, Long Island City in particular, are the big ones. And from a lessor perspective, we've done a lot of diligence on that process. There are quite a few transactions that we had to analyze, but the amounts don't add up to all that much, maybe $30 or $40 million of assets of lease receivables that will be reflected on our financial statements, which were not in previous years. So there are some big numbers out there. We've had our arms around this though. Deloitte has not audited the details of it, but we have discussed with Deloitte one of the key assumptions, the incremental borrowing rate, called IBR, which is a key variable in estimating what the assets are, and assets and liabilities are. And I think we have shared our numbers, our methodology with Deloitte, and on the surface, they seem to agree that the approach seemed reasonable. Still subject to finalization though.
Okay, thank you. That's a problem all over the place.
It is.
Could you please remind me of what the material finding was in 2021 for the Public and Indian Housing Grant?
Yes, within the compliance supplement issued by the Office of Management and Budget, underneath special tests and provisions, there was a requirement for, it said something along the lines of lead paint remediation efforts needed to be remediated within the period of audit.
We had a full discussion of
Yes.
that in December,
Yes,
and so that's what we're referring to.
that's exactly right.
And that's for the letter that we were talking about, which I'm trying to address for the 2022 report.
Yeah, I
Thank you.
Yeah, I'd also like to make one other comment relating to something that will be relatively significant on the financial statements. We've spoken about local law 1 and the impact on the lead requirements in New York City, where the previous standard and the federal standard that still exists is 1.0 milligrams, but the city standard dropped to 0.5. So we have been testing aggressively the units using the new standard, and while the testing has not been complete, it's tracking at about 35% of the apartment units with some positive lead findings. In some cases, it may just be one component. In some other cases, it may be many. That compares to the previous testing results of 28%. So in essence, about a 25% increase in our lead findings. And that will have some direct impact on the cost estimation of the pollution remediation obligation in 2022, excuse me. So, directly that will cause a cost increase. There may be some other factors that cause some other type of cost changes, so we don't really have a final number to report at this point in time, but just to say we know the impact of the testing results will be a higher dollar value.
That leads me to one question. How does the audit interact with the federal monitor, or does he or she pay no attention?
So the federal monitor is involved in all aspects of NYCHA's operation to the extent that they want to be. So, the federal monitor is allowed to be involved in any facet of NYCHA operations to the extent that they want to be. I meet with that team every other week on other matters relating to, our property budgets and operations, financial operations. They have not expressed any concern to me regarding our financial statements at this time. I think we spoke about this before, but they are allowed to speak with Deloitte and any member of the NYCHA staff at their own request.
I keep forgetting, who does the quarterly report?
The
Is that the monitor?
Correct.
All right, and we get access to that, right?
The quarterly reports are public reports, so they are posted on the monitor's website, and they're available for anyone in the public to access, similar to the other.
Can you text me the website?
Yes,
We
share that
sent
with
you the
again.
memo. Will you
Huh?
guys read the memo that was sent to you on Friday?
Say what?
It's included in the memo that was
It's
sent on
included in the
Friday,
memo.
but we can
As a
resend.
follow-up item from the last meeting,
Okay, I'll
and
look
it
for
provides you
it.
the
Okay,
link
I'll look for it.
so that you have free access to it.
Now, you brought up local laws. I don't know where I read it, if it's here or somewhere else, but I wanted to understand the implication or the correlation between local law 97 and local law 33.
I'm not sure I have that kind of information, but
Oh, okay.
we can look into that. Which local law 97 and
And 33. Had to do with the buildings of more than 25,000 square feet must demonstrate they have taken aggressive steps to meet energy efficiency standards and reduce gas emissions. I think that's 97. So there was something mentioned somewhere here, like I said, I'm not sure whether it was here or somewhere else where I was reading. And I wanted to know, they mentioned local law 33. So I'm trying to get an idea of, how does it correlate one to the other, and how does it affect us? Yeah, it's just a little questions.
Okay,
It's not even.
I'm trying to cheat a little.
It's just confusing, you know. And then the energy efficiency, which is dealing with local law 3245. I'm sorry, we're speaking, I was just trying to clear up to my colleagues about the two different local laws, and they have to do with energy efficiency and gas emissions. And I know that that's a big thing right now that NYCHA is getting wrapped up in, or involving in trying to lower the footprint, I guess. And so that's why I'm trying to figure out how that's going to affect us. I know I read it somewhere, I'm not sure quite well, but I made a note on it, and I just want to get that cleared up.
Sure, happy to follow up, although in truth, I don't know that that impacts the financial statements, so we might have to connect you to our sustainability
But
team.
wouldn't that be an expense, trying to do the energy efficiency?
I'm not sure what the local laws
Okay.
regarding energy efficiency are,
Okay.
sorry, I don't want to misspeak.
Okay.
Jill, let me ask you a question about energy efficiency. You now have contracts with vendors that are providing energy performance contracts. They have provided presumably capital for new boilers or whatever. So question, are those being handled under leases or under just general operating expenses, or how are those contracts, the energy performance contracts, being handled on the financial statement?
They are currently being reflected as debt, long-term debt in the financial statements. They are technically written on master lease agreements. We've drawn the conclusion that they're not technically leases from a GASB 87 perspective. Legally, they make the leases, but from GASB 87, they don't meet the requirements. So we expect it will continue to be reflected in long-term debt.
Even though they're called lease?
There are certain provisions in GASB 87 which indicate that if title is transferred before the end of the lease, then it's not considered a lease. In these particular transactions, it's pretty clear that the title is transferred on the execution of the transaction, so upon the closing date. So NYCHA actually owns that equipment on day one.
Oh, okay. And how long are these agreements for, these energy performance contracts?
They vary depending on the transaction.
Approximately 10 years or 5 years?
10, 15 years.
15, okay. So at the conclusion of that, then what happens? Are those expenses treated at the end of the contract?
No, there's debt taken out and reflected on the financial statements, and there's capital assets that are booked onto the financial statements and depreciated.
Oh, okay. I have a related question to Annika. The energy performance savings that are incurred, presumably from these contracts, how is that handled in terms of the HUD annual subsidy? Do they offset the subsidy, or are they part of the subsidy, the savings?
So that's a good question. So as part of the operating subsidies, subject to HUD approval, we're allowed to keep around 100% of those savings as they're related to EPCs.
Excellent.
But that is then a part of your full subsidy submission. And so that amount could be prorated the same way your subsidy is prorated. So if we're at 95% proration, that's a piece of the formula, and it would be prorated as such. But the EPCs have that great benefit where you get to keep those savings because it's a HUD program.
As a PS, I was involved in that discussion a long time ago.
Well, we appreciate your advocacy.
Well, I dealt with Washington, D.C. I'm not, he's not one, but I dealt with Washington, D.C. in terms of those issues, and we advocated on behalf of trying to have NYCHA keep the savings and have the baseline,
Adjusted.
adjusted to retain those savings. So it's a gift from HUD, basically allowing NYCHA savings, and it doesn't affect your baseline. You got the old baseline.
Correct.
So that's a real, that's good for our NYCHA. I'm not gonna tell you when we did this.
No,
But it was a long time ago. But I just, thank you.
they gave us something.
Well, the federal government is very aware of the need for energy efficiency in public housing. Very aware of it. And so the savings, any savings that take place benefit everybody. So, and particularly HUD. And NYCHA. So, okay, thank you. That's it for energy efficiency.
Anything else?
Anything else?
Yes. Agenda is completed, Mr. Chairman. So there being no further item on our agenda, motion is in order for the adjournment of the meeting.
Is there any point in time where we have a private meeting with the auditors? Where the audit committee meets with the auditors and nobody else? We do that at least once a year. I just wonder when that's going to happen.
I'll have to discuss that and then I'll get back to you.
I think in past years it happens in the June meeting, at the conclusion of the audit.
At the end of the audit?
Yes.
That's what I thought.
Is there anything that that Deloitte needs to ask individual members about at any time between now and June?
Yes, then we'll reach out to you individually outside of this meeting and ask those questions.
So it'll take place sometime between now and June.
Yes.
Yeah. We sign our lives away. I move we adjourn.
Okay, there's a motion to adjourn. Move, seconded.
So moved.
Second.
And that's been seconded by
Mr. Cool.
Second.
Mr. Cook. Okay, all in favor?
Aye.
Okay, thank you very much.
I have one